I'm a little bit more concerned today than I was maybe a month or two ago.
Yep.
Of course, it's important to remember that, we are coming off a extended period where core inflation was generally coming in below consensus forecasts. Now we have a month or so where, the inflation data has generally been surprising to the upside. There could be some residual seasonality in the data. I mean, we saw this last January as well. But I think whenever you get numbers like this, it's just important to go back to first principles, right? And, for the Fed, compensation growth equals inflation plus productivity. That's a fairly standard sort of identity in macro. And what do we know about compensation growth? It's moderating. If you look at the last employment cost index, it ran about 3.5% at an annual rate. We know that productivity is picking up. So I think generally, the inflationary impulse that's coming out of the labor markets are basically consistent with 2% inflation. And at the same time, we know that business and household inflation expectations are declining for, in the short, medium, and longer run. So I think that's encouraging for the Fed. So January was a bad month for inflation. That pushed off the timing of the first rate cut. But I think it's important for people to understand, what are we still talking about here? We're talking about how much the economy is growing and when the Fed's going to start cutting rates.
So let's just go right to that, Neil. I think the Fed Chairman Jay Powell did a very good job communicating this. That the last time he spoke, that all right, March really isn't in the cards. So the market started discounting May. Now it seems like the market's pushing this out to June, and I guess a data point like today would give more ammunition to the folks that are thinking about a June cut.
Yeah, I think that's probably right. I mean, June probably goes up a little bit, but look, I mean, we could be back here in March or April talking about downside surprises to core inflation, in the March
Right.
data. And that could then push the
Right.
the probabilities of May up. So I think it's important. It's important for people to understand, I think, what is the overarching story for the year? Again, it's the economy is growing and the Fed is probably cutting. I
Right.
think that's a reasonably good backdrop for risk appetite.
Neil, an hour ago when you were in makeup to come on YouTube Bloomberg Podcast for us, you did a wonderful RenMac thing out on Twitter. Folks, I'll retweet it. RenMac, Renaissance Macro Research. It's some goofy name, at RENMAC LLC. There it is, RenMac LLC. How does the sentiment get you out into 2024 right now? Is it a bull economy as well as a bull market?
That's my view. I mean, I think when you look at sentiment, what you have right now is a simultaneous improvement in business and consumer confidence. So it kind of reeks very, of early cycle type dynamics in the economy. And obviously, this has been a very unusual cycle where, certain industries have kind of shut off, turned on at different times. And so, traditional kind of business cycle rules haven't really worked out that well. But right now, what it looks like is after a lengthy period, it seems to be, we're kind of approaching something closer to normal. And, frankly, the fact
Right.
that corporate and consumer confidence is picking up at the same time, I mean, that's going to be good news, I think, for the economy.
Right.
And, with respect to corporate confidence, that's going to be good news, I think, for business investment spending.